Hey everyone, good morning. Happy Thursday to all you traders out there. So, interesting morning this morning, right? We had our unemployment reports this morning. We had our GDP revision. The GDP revision was pretty much flat the same, kind of a non-event, but the unemployment was important. Let me kind of talk to you guys about that too. I'm going to share my screen with you guys. Uh, if you look at these two charts, guys, for you new traders, you new economists, whatever you are. Uh, the way you look at this is you've really got two very important numbers, but they're important for their own reasons, and they interlock. Ask yourself in life, right? You've dug yourself into a hole. What is the first thing you stop doing? You stop digging, right? And that's really the way to look at these unemployment reports. You got initial claims here, right? Which are the new ones. They just came on last week. And then you've got the continuing. And we talked about it the last 2 weeks. This is really a critical number because imagine you've dug yourself in a hole and the first thing to do is stop digging, but you're still digging. This is still digging. The problem is continuing claims just stayed flatline, but your new claims were piling on, right? But now that changed today, and it's probably showing that there's some things going on that are good. Well, obviously they're good, but then you see, and then the continuing claims too. So that's kind of the way to look at it. You first keep the horse in front of the cart, and what you need to do is stop getting people on unemployment, and then start getting people back to work. It looks like that's starting to happen. I talked about this in December. I was very animate about this. I said that last stimulus was probably the last stimulus we had, and it was the last stimulus really that the economy needed, and it's playing out to be true right now. I know it was only $600 checks, but all we needed in December was that little bridge to get the American labor force crossed over to prosperity. And it seems like that $600 was enough to keep everyone afloat. And now things are starting to gel a little bit. We'll know tomorrow, right? We'll get some retail numbers. We'll get some core numbers tomorrow. But this is a good sign, guys. We'll see how the market takes it today. We recommend still being very cautious right now in your trading, like we've been talking about. And the reason is we're still in this channel, especially in the S&P 500, and the NASDAQ seems to be going through something, right? You can really see the regurgitation with it, right? It's just down sharp in the morning, the whole market just down sharp. And then it just blows up, it reverses, and it just does that back and forth, right? It's down big, up big, down big, up big. And what happens is, and we talked about this, like we're option traders. We only have 3 plays right now, and most of them have plenty of time on them. And the reason for that is we're looking for some definition from this market. Let me pop on over to a S&P chart here, guys. Let me move my head there. And you can see it here. If you look in this, the last, since about the beginning of the month, second week of the month, we've just been in this sideways pattern, guys. And you see, we'll have good days, we'll have bad days, but it just stays in this pattern. It's not really making new highs, not really making new lows, right? Really, you could do this pattern from about 382, maybe up to about 392, right? Nice 10-point swing there. But you see how that's happening. What happens is in this situation, guys, is let me stop the sharing here. What happens in that situation is if you start laying out these option plays, guess what? You got that time decay working against you. You got a market that's not going either way, right? You're kind of close to winning, but you're not where you can tap out. It's just a churn, right? And you don't want to get involved in that. Use this time to take a little extra attention and check the rest of your portfolio. Make sure you got good balance sheets, good dividends, all weather stocks. We'll probably see, we think in the afternoon or maybe tomorrow morning after we get those true economic reports, like your consumer spending, we'll see how things shake out from that. But we think we'll start getting some serious definition over the next maybe 24, 48 hours. Going into the weekend, and we'll keep you updated on what we're up to, but just stay cautious for right now. Okay, guys. It's an interesting time. It's like I said this back in December was the shot that our politicians had to get this economy and the American worker back. At this point, we don't need any more stimulus. We still need this. We need the protections. what do you call it? The eviction moratorium, things like that, things that give people peace of mind while they're stepping back into work and getting their personal budgets together and stuff like that. We don't need influxes of money. We don't need anything like that. Maybe small PPP to get those small businesses. Obviously, big business did very well during the COVID, right? Look at your Home Depots, your Costco's, your big tech and all that. Right? They did fantastic through the COVID. In fact, the COVID was probably better for them than it would have been if it was a normal year. But you've got that underlying small business right now, and they are the ones that need help. Your mom and pop stores, your corner grocery and things like that. They need the help. Your favorite restaurant that's not part of a corporate chain. Those are the people that need help. And so you kick them a little bit of opportunity and you get the American worker off his butt and back to work. And guess what? You open things up. The magic pill we've been saying since December is simply just open up. That's all these guys had to do was open the economy. We've had a vaccine for 3 months. We just got another J&J one yesterday, right? I don't know how somebody had asked me in one of the comments how I felt the J&J vaccine would affect things. And I'm not sure. It's a one-shot drug, but it's really only 66, 67% effective. And it's only effective in preventing the harder symptoms, right? So I don't know. Is it a vaccine? Is that really a vaccine? But anyways, guys, we still got the Moderna one, the Pfizer one, and we just need to get these shots in people's arms. And we need to get people back to work. You get people back to work, letting them open their businesses. And that's kind of the guys right now. We'll see. The Congress pushed that stimulus into over to the Senate, right? The House passed that bill over to the Senate. So they're working on the stimulus right now, too, at $1.9 trillion. That stimulus is not a stimulus anymore. It's a pork package. Let's all be honest. I don't care what your political ideologies are. You look at that package right now, it's a pork package. Reminds me of the late 70s and the kind of into the 80s, guys. That's how Congress used to do everything. You know what I mean? Oh, we have to support X because something's wrong here. Okay, well, let's give 150 billion to the Museum of Natural Arts in Tuscaloosa. And then they can go back and tell their contingency, look what I got for us. Anyways, it's a pork package, guys. It's just stuffed with nonsense. And look, at this point, the $1,400, it's probably not going to be that effective. Yeah, it's great, man. Free $1,400, but what is the cost for it in the long run? You know, it's kind of like, here, I'll give you $1,400 today, but 2 years from now, you're going to be dead broke again. Or you can make it without the $1,400, and 2 years from now, you'll be living prosperously. That's basically what that is. Like, again, what we need is the protections. We need the moratorium on evictions. We need a little bit of help for small business. And it should be focused and direct. Not just this throw out loans and then all of a sudden Goldman Sachs gets half the money, right? Remember when that was going down on the first PPP? So like I said, we've been saying that we don't need this stimulus. The last stimulus was the opportunity for Congress to prove to us that they care about the American people, which at this point we know they don't, right? I mean, come on, they're all self-serving. It doesn't matter if they're Republican or Democrat. It's all self-serving, power protection, keeping their cushy jobs, making sure that they get paid during the next pandemic, right? You notice something that's happened over the last year. No politician has missed a paycheck, and every one of them is vaccinated. All right. Glad to see those votes went to work. But, you know, and like I said, this is not politics. Keep your ideology about it. This is just an honest assessment of what's been happening, right? Let's see how the market opens today, guys. That's what we're going to do. We're going to see how the market opens today. We'll see how it reacts. We know the last 2 days, it's been a very, very, how can I describe this? It's been a very weird, almost, it's just been a weird market session the last 2 days. And this is what's happening. Here you go, guys. I'm going to close with this analogy. All right. And I kind of touched on it yesterday, but think about it like this. So you have a heroin addict, right? And so in the morning, he wakes up and I got no heroin. Then all of a sudden, the drug dealer comes along and boom, there you go. You're all juiced up, right? That's what happened day before yesterday, right? The market was just blood ugly. And all of a sudden, the Fed, the dope connection came and gave it a shot of heroin. And I just had a great day after that, right? Well, guess what happened? The next morning, we were red again, right? Heroin was wearing off, right? But who comes along? Hey, our local drug dealer, Jerome Powell. And he pops a shot in the old market's arm. And guess what? We had pretty much a green day yesterday, right? Things got really nice. Where's that shot come from today? Right? Jerome Powell's finished talking. He's not going to be massaging or masturbating the market to go after today until probably next month or at least 2 or 3 weeks. Where's that shot come from the market today? So we'll see how we open up and let's see how the market reacts. Like I said, we're still on that channel there on the S&P 500. The NASDAQ's going through a churn, but it's even with that, it's hard to tell which way it's going to ultimately make its next leg. And we're talking about a leg, right? Like the November leg, right? 40, 10, 15% on a market. Anyways, guys, the Game Stoppers are back. So this morning, I was trying to find the economic reports. And this is what I tell you guys. You've got two enemies of the people right now, if we're all honest, okay? We got two enemies of the people. One is your politicians, okay? They do not care about us, and they're only self-serving. But two is the media. Look at this morning. I was hunting down, me and the trade team were trying to hunt down those economic reports, right? And all it was articles about GameStop. You know what I mean? If you're trading GameStop, God bless you. I hope you got some of those. It doubled in a day or something. God bless you. But look, if you think that's what's important going forward, as far as economics and stuff, that shows you our media. They're not, again, they're not working for you. They're working for them, right? Clickbait. What's the odds of, ask yourself right now, every person that's watching this video, ask yourself, how likely are you to click an article about an economic report, right? You just look at the headline. You're not going to go read the article. Look at charts and stuff. But you see an article about GameStop, right? And it talks about all this espionage, market manipulation, the government's involved now. Here comes the SEC. You're going to click the hell out of that link, right? And that's what they do. They're not giving you the news you need to succeed. They're giving you the news to put money in their bank. All right. So just remember that when you're looking at the media. Okay, guys, I just thought it was entertaining this morning. I couldn't find anything on the freaking unemployment report. Let's see how they handle the retail sales tomorrow. Now, I'll close with that, guys. The retail sales tomorrow. Okay, that's probably an inflection point. It's either going to be this afternoon or after we get those reports and the market starts looking at things very honestly. Okay. Let's go ahead and let the day start. We're about 10 minutes from the market open, guys. You guys, good luck out there. Like I said, trade cautiously, right? You see how these spins are coming on the market. They're not even 2 or 3 day moves. They're just 15-hour moves. So it's easy to get caught in that churn and lose your money. Make sure you built your portfolio properly. Make sure you have some of those good loving stocks that'll weather all kinds of times in the market, and just have fun, guys. It's Thursday, man. We're about 48 hours from the weekend. All right, gang. I'll talk to you guys tomorrow.